Welcome, everyone. Another episode of Back and Forth. That's Becker. I'm Orr. We're ready to go. Lots of topics. You can see all of them on the bottom of the screen there. And the lead-off topic, the November rally. Historically, November has been a very strong month. Will it happen again in 2021? We're going to talk about it. You want to stick around.
Yes, our first back and forth in November, and we are going to start the season off right again. Now, if you want more back and forth, so you want any of your financial 15s or webinars, anything else, please go to our website at beckerorr.com or like us on Facebook, or most importantly, sign up, be a constant subscriber on our YouTube channel, and you get everything going from there. But today is a Jets game day, and Clinton is doing the by remote back and forth because it is game day.
From the home office.
From the home office in Beausejour. There we go. We'll deal with it from there. But yeah, let's start off this thing. We are talking November. We are now into a new month. We are past basically the worst time of the year. What goes on typically in the market in November? Should we be worried? Should we be pulling out? Or is it time to put the money back in?
Yeah, I mean, historically, we're in the strong part of the season when it comes to investments. And you always have to take seasonality with a grain of salt. But we had a great chart here. This is from Ryan Detrick of LPL Financial, and he looked at a couple of scenarios. He tried to slice and dice it a few different ways. He said, what about the past 10 years? That's the orange bar, and lo and behold, November is pretty strong in the past 10 years. Yes, same thing with the past 20. Same thing since 1950. And then if you want to get really specific, you looked at all the Novembers in the year after a U.S. election, and lo and behold, those are positive as well. So you've got a few factors here, Kevin, all leading to a seasonally strong November. So that means you got to be a little bullish, I think. You came off the correction of September. You're heading into the end of the year. You got some seasonality to help give you a bit of strength and momentum. I think you're in for a year-end rally. That's my take.
Yeah, I would be in the same boat. I mean, just going by that chart, it's basically proven that if it's one of the few months in the year that you really want to be in the market, November seems to be it. I mean, April's another one just before that May sell-off that we get to usually. But yeah, November, December, you look close to that Santa Claus rally. We've come out of the worst of it. We're now into that sort of festive scenario before we get to the year end. Everybody wants to know what's going on. So I agree. I think that you're going to see a decent November. And without any sort of a recessionary or level hanging above us, I don't see a reason for people to constantly change. We're not looking at interest rates or anything else at the moment. So, I mean, good news has been coming out. We're there. I mean, that's something I agree with. But otherwise, November looks like it's going to be positive. Let's see what we can go from there. But that's my view on it. Now,
yeah, we're probably on the same point there. Yeah, we got to change gears just a little bit here. Something a little less positive. And you see SQUID on the bottom of the screen. That's not SQUID Game exactly. It has to do with the meme coin, the cryptocurrency called SQUID. I'll give you the background here, Kevin. Then you can give me your hot take. And the background here is there's a coin that came out last week. It was what they call a meme coin, because it wasn't an official. SQUID Game did not give it approval. They just called it SQUID to kind of lean on the popularity there of SQUID Game. And it went from pennies to $2,800. So if you would have put a little bit of money in there, for every dollar you put in, you made about 300 grand in the span of a week. It was ridiculous. But then all the red flags started coming up. For example, people are complaining they couldn't sell. So they try to cash in their instant millions. Couldn't happen. And then suddenly went from $2,800 to half a penny. So essentially from $2,800 to zero in a span of 15 minutes. And then what they call a rug pull, it came out that the makers of this coin were scammers, and they're running away with the money. So you went from nothing to incredibly high, back to nothing, all in the span of a couple of weeks. And unfortunately, I think this is kind of part of the cryptocurrency world. It's not regulated, so you can get a little more of this. That's enough rambling for me. What's the hot take here, Kevin, on SQUID Coin?
Well, I think it's a conspiracy with Netflix. They violated the copyright infringement. That's why it went from 300,000 to zero. It has nothing to do with scammers. There's a whole bunch of these things, depending on whether you're right or left, however you want to look at it. But no, I think you're the same thing. Cryptocurrency is such a new scenario, and everything on the internet can actually be manipulated sooner or later, depending on where it is, whether you have the checks in place. But yeah, the minute somebody comes out with something like this, if things seem to be too good to be true, they usually are. And I think that's the sort of scenario that you got to look at here. But, you get it hyped on social media. One person buys in, another, and next thing you know, everybody's going up. So I agree with you. I think it's something that you have to be weary of and should be, checking it out with maybe a professional to see, does this look like it's something real? But again, I mean, people learn the hard way, and you're hoping that you don't get stuck in that one. So I agree. It's something to consider.
To the credit, there were many quote unquote cryptocurrency experts
Yes.
that were pointing out, saying there's a few red flags here, you should be cautious, and they ended up being correct, those experts. So
Yes.
worthwhile to do a bit of research and not just jump in blindly, especially in the unregulated crypto markets. And I guess this is the latest warning, latest example to that effect. Let's switch back to seasonality here, Kevin. We talked sell in May earlier, or you hinted at sell in May, saying you're no longer in that May seasonal period. Why don't you walk us through that sell in May for 2021?
Yeah, my lead up to this was a little early. I should have been coming out with it at the end of Squid Games as it was. But yeah, I mean, typically we've always heard that same scenario. Sell in May and go away. And typically you sell in May, go away till the end of October, which is usually considered a bad month, though granted September usually tends to be worse. And then everybody starts to look at going back in November. But as we can see, just over the worst 6 months of the year, we have seen every index that we've got listed here gave a positive return. So anybody who did get out in May and was looking to get back in now, yes, you have actually not made enough money compared to what would have happened had you been in the market over that time frame. And it doesn't matter whether it's the Dow Jones index we're taking a look at or whether we're looking at small cap, things did well over that 6 month period. Now, is that always the case? No, but I would say the majority of time, there's more of that positive atmosphere than there is that negative. What do you think's going on with this?
Yeah, sell in May and go away did not work in 2021. And I know we did another video on it, which we'll link to somewhere over there, where we talked about sell in May, went through the data. And in the last kind of decade and a bit here, it really hasn't worked well at all. The markets have been quite strong, and that sell in May mentality just hasn't been playing out. And 2021 will be another year for that camp where that kind of seasonality aspect just really isn't holding up. And in general, seasonality, in my view, it can't rank that high on your list of reasons to invest. It's nice when it's wind in your sails and you've got a couple of other positive reasons and you can add that one. But I don't think I would start off with seasonality. So sell in May and go away, in my view, is always kind of lower on that to-do list when it comes to investing to begin with, let alone the fact that it hasn't really played out in the last decade and a bit.
No, exactly. I mean, that's one thing to always take a concern with. I mean, it's sort of like, well, do I buy the cryptocurrency based on the fact it's from Squid Game or not? You know, it's one of those things that's lower down on the food chain. But you're right, seasonality is never usually the way to go. I mean, taxes, investment strategy, there's a variety of those. But off of that topic, let's get to the banks. As we were sort of looking at the banks, or the OFSI, the Office of the Superintendent of Financial Institutions, since March of last year, 2020, has put a restriction on bank buybacks as well as increasing of dividends. And as we found out yesterday night, early this morning, they finally decided to say, okay, that rule is gone. You can now start buying back your shares and increasing dividends. What do we expect is going to go on with the market on this now in banks, Clint?
Yeah, I'll take a step back there just to explain for folks. The bank regulator, or in this case, OFSI, they stepped in 2020 because of the pandemic, everything being locked down. They didn't want the banks increasing dividends or doing share buybacks. They wanted them to conserve their cash, so they'd be a little more conservative, a little more defensive, to kind of shore up the financial sector. Because in the early days of the pandemic, we didn't know how bad it was going to be. So they took that action to help shore it up. And now you fast forward to today, and the banks are just loaded with cash. So they said, all right, you can start giving some of that money back again. So likely we're going to see dividend increases. I mean, there's some analysts saying you could see increases upwards of 25%. On the current dividend level. You're going to see share buybacks to likely step back into the market in a large degree, buying back their shares. And I think this was largely expected. And you can tell that because this announcement came out, like you said, last night or this morning, and the bank shares haven't really budged. You think this would be like a windfall, everyone would be excited, but I think everyone was expecting it, so it was already priced in to some degree. So the bank shares haven't really moved off of this announcement.
No, and I think if we take a look over the last 6 months alone, that we've seen the banks have an incredible surge. And I think a lot of it has been due to the reason that they've been waiting to see when OFSI was going to actually relate to this, whether they were going to do it, back in June, whether they should have done it back in August, but finally came out today or yesterday night and said, yeah, okay, we can do this now. So you're right. I think everything's been priced in on that. And that sort of gives us that area as, well, the banks still have a chance to grow once they announce what their dividend increases are, once they announce the number of shares they buy back. But until that point in time, I think we've priced a lot of this into the market.
Yeah, we're on the same page there. Let's move on to the question of the week. And we've had this question from clients, always phrased a little differently, but very hot topic, interest rates. I'll throw it to you, Kevin. When are interest rates going up?
Tomorrow. No, I'm kidding.
Next question. Move on.
Exactly. We go. No, theoretically speaking, I don't think that we're going to see an interest rate increase this year at all. I think what you've seen recently with the Bank of Canada in the Canadian situation, where they've eliminated the quantitative easing, has been a positive step going forward. I think when Powell came out on Wednesday and announced that they're going from 120 to 105, that's been a positive. I think that pushes the interest rates back a little bit more, depending on what inflation is going to be like over the next 3 to 6 months. I mean, for Canada, I think maybe April might be the earliest you get a quarter point. Maybe you get 2 or 3 interest rates next year. But if you're looking at the US, I'm thinking second half of 2022, if you're lucky. So I don't think it's an immediate scenario, but I do think that as opposed to the last 2 years, we will see an interest rate increase sometime next year.
Yeah, the whole idea that inflation is transitory, don't worry about it. It's just related to the supply chain. It's going to disappear. They're not necessarily backpedaling because central bankers always talk in code anyway, but you can tell they're kind of softening their stance. And I think the timetable for Canada has already sped up, like you just mentioned, for interest rate hikes. The US officially hasn't moved it, but I agree with you. They're going to speed up their timetable as well. They're going to want to start fighting this inflation, and you do that with higher rates. So they're coming. It's not a matter of if, it's simply a matter of when. Is it going to be early next year, late next year? But it'd be very unlikely, in my view, that we get through all of 2022 and neither central bank increases rates. I think that is a very unlikely scenario. At some point in 2022, rates are going up for both Canada and the US. I think that's pretty straightforward with that one. But with that, we tackled the question. But a reminder, folks, if you have a question, something you want us to tackle, or on this topic or another topic, you can always get a hold of us. Chatwithclintonkevin.com, part of our website. You can fill in the form. We'd love to hear from you. Any parting comments for the folks, Kevin?
Yeah, no, I think that covers most of everything. One of these days, we will take this on the road again like we did in Whistler, but that may be after the Christmas season. Until then, you have to deal with us either in the office or in the home office going forward. But we're more than happy to answer any questions you have, any topics related to either anything we do here or any of our financial stuff. We're more than happy to get in touch with you on anything. I'm done for today. I think it's time to get back to business on Friday and see where we go for the weekend.
That sounds like a plan. Take care, everybody.